What's up, YouTube? Eric here. Netflix just reported earnings after bell, and they absolutely crushed it. They're up 14% after hours. Now, this is obviously important for Netflix shareholders. It's important if you're short because you're getting crushed, but it's also important for the bulls in the greater market. The index right now on the QQQ is up over 1% after hours after a very volatile session. And their message really to shareholders, they want to focus on revenue and profit, not subscriber ads. And we'll get to that in a second. Subscriber additions were actually decreasing. So when you look at this company, it went through a period of accelerated growth, got to a point where it started to plateau. You saw subscription basically dip. You saw less subscribers coming in, that growth starting to stall. And so the market looks at it and says, is this a growth stock? Is it a value stock? Where do we value? How do we value this company? It's a lot like Meta, where they're pivoting and you have to try to figure out, is this going to work out long term or is it going to continue to have deceleration? This earnings report shows the bull side of Netflix, showing they're actually starting to have some progress. They're actually seeing subscription growth come back, and they're focused on other things such as adding new tiers. There are going to be new tiers added that are essentially going to allow you to get Netflix with ads. And that's going to give you some options when it comes to a subscriber base. It's also going to give more revenue and the ability to forecast a little differently for Netflix. So Netflix will no longer forecast customer additions each quarter and attempt to shift it, again, focus on revenue and profitability. They pointed out in a shareholder letter, they make $5 billion in operating profit, while some of the competitions lose money. They kind of took a shot here at Amazon Prime and some of the competition. Now, the question for Wall Street, the question for you, even if Netflix asks investors to change their focus, will you listen? Will Wall Street listen? Is this a short squeeze and it's going to fade, or is it going to keep going higher? And later we're going to look at a chart. I'm going to tell you where I think the stock might go. These are some quotes here from the letter. We are increasingly focused on revenue as our primary top line metric. This will become really important heading into 2023 as we develop new revenue streams like advertising and paid sharing, where membership is just one component of our revenue growth. Netflix will continue to provide guidance for revenue, operating income, operating margin, and net income, traditional metrics of profitability, and they still will report subscriber ads each quarter, but they won't forecast what's to come. In other words, they're not going to give you guidance on the subscribers, what they think they're going to get next quarter, which is a big change if you're a shareholder. Now, in theory, Netflix advertising tier and coming crackdown on password sharing should basically rejuvenate subscriber growth. It should give you a boost. And we saw that today. They gained 2.4 million subscribers. The consensus was closer to 1 million. So they absolutely crushed it. And things like Stranger Things 4, and they've had some other shows. I'm actually not a Netflix subscriber. One of the few people probably on the planet Earth, it seems, that does not have Netflix. I don't have Netflix. I have a lot of the other ones. May see quarters with 10 million or more subscriber ads as relics of the past, is what it says here. We'll see if that happens. It's a possibility, so let's see. So this is important here. Instead of operating in a world filled with comparisons to a pandemic era fueled by surging growth, they want to focus on a streaming service here that actually makes money. So they're pivoting from just growth at any cost to how do we make this company profitable? And it's a big deal. It's very important. It's hard to build a large and profitable streaming business. Our best estimate is that all of the competition is basically losing money on streaming, with aggregate annual direct operating losses this year alone that could exceed $10 billion, again, taking shots at the competition, compared to $5 to $6 billion of annual operating profit for Netflix. In other words, Netflix is saying it's built a great streaming business while Disney, Warner Brothers, Comcast, Paramount, and others want to build a great streaming business, but they haven't gotten there yet. Netflix acknowledged some of their competition might get there through consolidation and price hikes. So this is a clear competitive advantage for Netflix, unlike subscriber ads, where Disney, early in its growth cycle, having launched Disney Plus in 2019, has the upper hand. Disney added 14.4 million Disney Plus subscribers last quarter. Netflix lost 970,000 subscribers. So again, the stock's up over 14%. Next quarter, Netflix said it'll add 4.5 million more customers. So they said they're not giving us forward metrics, but they are anyway. Netflix says we're not supposed to be focused on that anymore. The question, will investors listen? Let's look at a couple other things. Let's look at the metrics, the valuation. Let's see if this stock is a buy, and let's see what it might do for the greater market. So starting November 3rd, which is not very far away, they're going to have ad-supported tier for $6.99 a month. Coming to Netflix in November, commercials. Netflix announced on Thursday plans to roll out a version of an ad service for $6.99. The basic with ads plans will join their existing 3 current ad-free plans. A basic plan's $9.99, standard's $15.49, premium's $19.99. Netflix said the basic with ads plan will feature an average of up to 4 to 5 minutes of ads per hour. It seems like a lot. Ads will be between 15 and 30 seconds in length and play before and sometimes during shows or films. That's a big no for me, but maybe it's okay for you. Netflix will not accept political or policy ads or those for smoking products or guns. The ad tier will also be offered in 11 countries, including Canada, Australia, South Korea, United Kingdom, France, and Germany. So this is their shareholder letter here, just really quick. We had big hits across TV and film in Q3, Monster, The Gray Man, and Purple Hearts. So this is interesting here. Netflix has higher engagement than any other streaming service with room for growth. In the UK, Netflix accounts for 8.2% of video viewing. That's 2.3x of Amazon, 2.7x of Disney Plus. In the US, Netflix accounts for 7.6% of TV time, 2.6 of Amazon, and 1.4x of Disney Plus, Hulu Plus, and Hulu Plus Live. Our competition, our competitors are investing heavily to drive subscribers and engagement, but building a large, successful streaming business is hard. Basically, again, taking a shot like we're successful and you're not. We estimate they are all losing money with combined 2022 operating losses well over $10 billion versus Netflix with $5 to $6 billion of annual operating profit. You can see some of the numbers here. We won't go through a whole lot of this, but year-over-year growth with global streaming paid memberships, 9.4%. You can see the additions there, the free cash flow, and so on. When I look at Netflix from a valuation perspective right now, guys, it is trading. Let me just move this over. So right now, the 52-week range, it got down to 162. After hours, it's actually 275. So if you bought this at 162, you're very happy. If you bought it at the high at $700.99, you're not very happy at all. So you can see on a chart here, it got up to $700 back here in late November 2021. And it fell off a cliff all the way down to 161, and it's quite a bit off the bottom now. So the question is it still a buy? Large cap, $109 billion. The quick metrics on this, guys, the PE ratio in Google shows a 21.42, which is, pretty attractive. $107 billion market cap brings in some pretty substantial revenue for that market cap and for that valuation. Let's look at a chart. Now, before I do that, I have to announce this video is sponsored by the Motley Fool. If you want to see the 10 best stocks to buy now, visit fool.com/fired up wealth. They don't tell me what to make. They don't tell me what to create. They're a great partner. They collaborate. They partner with me so they can bring free content like this to you on YouTube. So check those guys out. Okay, so on this chart here, intraday, $700.99 topped out. Looks like November 18th, 2021. Fell off a cliff. Just a slow nosedive like a lot of these growth stocks. Some big gaps here, which aren't healthy at all. And you look at this, it did make higher lows, I guess you should say, 162 to 169. You can see it made higher lows. It's trending up. And it bounced off this S2 around $212. Right now, post-mark, you can see it's $275, this blue line. This moving average here, it's probably going to have some resistance up here around 292. It's going to have strong resistance around $300. For me personally, I'm not sure if I would chase that $275. You could argue it's still attractive. And if you're thinking long-term, there could be some opportunity for this one. I think you have to kind of wait, let it cool off. Maybe it pulls back a little bit. With that said, if you're a long-term investor and you really believe in the company, maybe it's not bad, but it would have been a heck of a lot better to buy it back at $212, $167, $170, and so on. For me personally, I'm on the sidelines for this one, guys. I hope that it does well. I think that it could actually be very bullish for the greater market. You can see the QQQ right now is up in pre-market. We'll just look at this really quick. I think it's up about 1% last time I looked. So the QQQ is up 1.27%. So when I'm looking at this, guys, that's very positive for the market. We're gonna have some big earnings tomorrow. You know who they are, a big EV company, big semiconductor company. Those are gonna be important, and every single earnings is gonna be important. The more earnings that we continue to beat, the more thesis the bulls have to kind of stand on that we've already seen a bottom and that we're gonna go higher. Of course, the bears are gonna tell you that we have to go lower. And if earnings come in worse than expected, you're gonna see headline news, you're gonna see volatility. I think when you're looking at the market, there's definitely room for opportunity for the upside between now and January. The question is, will that hold up? Will we see new lows maybe sometime in 2022? 2023, and I don't have a crystal ball. As a long-term investor, I'm buying quality stocks at levels. I'm dollar cost averaging, and I'm thinking 5 and 10 years out. I suggest you do the same in a bear market. On the other side of the bear market, that's where wealth's generated. It's generated in the bear market, and you realize those gains on that bull run. If you have not subscribed to this channel, do so now. Click that bell to get notifications and drop me a like, drop me a comment. Let me know. Do you think Netflix is going to go higher from here? Are you a bull of Netflix? Do you think it's trash and it's going to go to zero? Drop a comment below. I appreciate your time and attention. Have a great rest of your day. Take care.